Hello everyone, welcome to tonight's webinar, The Basics on Understanding Trading. My name is Mike Rotting. Before we get to the webinar, just a quick chat about the host. CMSTrader, for those that don't know him, is a broker that's been around for a few years now with a good reputation. So if you are looking for the first time signing up for your account, take a look at him, review everything on your own accord, and if it strikes a chord, then why not? That said, let's go straight to it. And tonight we'll be discussing the basics on understanding trading. Now, firstly, what we'll do is look at what we're going to be looking at is firstly the introduction. I'll just introduce myself really short, who I am, what I do. We'll look at the tools a little bit that you have available for when you start trading. In this case, also looking at the CRX platform that CMSTrader uses. We'll go over some basics. Basically, I'll try and give you a core foundation that you can utilize pretty much in any technique because it's like the core basics, what everything revolves on. We'll then go to the chart. I'll do a little bit of the basics in practice, and then if needed, a Q&A sessions afterwards. It's got time indication, but some take longer, some takes a little bit less. So first of all, who am I? Well, like I said, my name is Mike Rotting. I studied international studies at the Cambridge University, BTech system. And during my time studying that, I got quite tired of not knowing what I wanted to do. A lot of the consultations I had all pointed out towards accounting and things like this, which personally to me sounded extremely dull and boring to do. I'm sorry if there's any accountants in the audience. But I just don't see myself doing that. So by accident, I stumbled during my studies on something that was called Forex, and it was intriguing for me. And it had similar aspects of analytical factors, but then also with numbers. So it had a mix of the two things that I was good at. And well, that kind of put me to what I do. The first 3 years were a struggle, like for most of you, trying to figure out what you're doing wrong, how does it all work, how does it get connected. After 3 years, I had a penny drop, and a light bulb switched on, and I started winning consistently. Not what I used to, that you win a little bit, and then a few months down the line, you lose a lot of it. I started winning consistently, and it stayed that way, and it stabilized at between 65 and 73%. And it stayed there for 2-3 years in a row, where I was consistently making profit for the last 8 years now. So yeah, 11 years, 3 years have been up and down, and then the last 8 been on a yearly basis consistently profitable. So yeah, so now I just teach and I do webinars. So let's take a look at the platform first. For the tools that we have, let's take a look at the platform. So with CMSTrader, they utilize this. It's called the CRX platform. It's a little bit different from the MT4 that you may be used to. It's got the same elements though. Everything is kind of the same. It'll take a little getting used to, but other than that, everything that you need is there. There's not much more to say about this platform really. Different brokers have different platforms. CMS uses this platform. Other brokers that you're used to from the past may be using things like MT4. So going to fundamentals. A lot of people have a lot of problems trying to figure out what kind of announcements they should be looking at and how to trade them. So the most important thing here is that when you trade announcements, first of all, you need to understand what it is that you're trading and how is it relevant to the currency pair that you're trading it on. This will take practice. Generally speaking, as a beginner, you should not be thinking about trading fundamental announcements or the economic calendar, mainly because it's just there's too many variables and there's too many different results depending on certain market situations that cause it to do, even if it's, for instance, a positive announcement for the pair, it could still be negative in the daylight of whatever the market situation is. So it takes a lot of practice. It takes a lot of time to actually learn to trade it properly. But what you should know is that even as a beginner, as a basic, is that you should not be having positions open, and if you do have them open at the time of a fundamental or an announcement, is you should move your stop loss to zero. Take the risk out of the trade if you do wish to continue the trade during the trade announcements. If not, just close the trade. And all you have to do to know when the announcements are is simply go to any economic calendar. You can Google it. The broker may have it on their page. You may have it on your profile integrated. So take a look at it. Make sure that you have, before you start your day trading, that you know what's coming up. Technical analysis is another thing. This is basically the core foundation that most of it revolves around. It basically tells you, it visualizes what it's been doing, where it's been turning, resistance and support lines, what kind of trend it's been following with trend lines. And then you get a bit more advanced where you get a mix between indicator and technical, which is Fibonacci basically. Then we have things like Bollinger Band, volume trading, grid trading, and you get these different techniques. But technical analysis on its core principle is basically trend lines, resistances, and support, and a little bit further down the line, supply-demand zones and time frames. They will be a little bit more hard for beginners to learn. You should start with the most core basics that I will show you today, and really master those first before thinking about going on. Indicators. I touched on that a little bit. Now, indicators are tools that you should use to vindicate your findings from everything above here, fundamentals and technicals. They should never be the driving thing that makes you decide which way to trade. Basically, RSI, CCI, moving averages. Okay, these are crossing, thus it is a buy, thus I take this long position. That's bad. The reason that that's bad is because you completely ignore the relativity of the current market. Because things are going in a certain way, and that by indicator based on this formula that it works on, it indicates that it should either turn or start doing one or B. It doesn't necessarily have to do that. Indicators show you what happened, not what's going to happen. So they're always basically one step behind, not one step ahead. Extrapolating data from the past into the future is something you should utilize by also looking at the chart. You should never just use an indicator on a pure purpose. You should make up your mind what you want to do for a trade and then utilize the indicators to confirm your thought. So the basics. We're going to go look at the following aspects now. We're going to go to the chart, and we're going to just understand what we're actually looking at. Technical analysis, we're going to take a look at it. We're going to take a look at risk management and capital management as well. The two sound alike, but they're not. So we're just going to do that in practice. This is going to be the easiest. First of all, the chart. Now, the chart that I have here is one of the majors, the Euro-US dollar, 4 hours. This is the most known one to most of you, and it is very important for everybody to understand what you're doing. Okay, so the 4-hour chart is usually where you start, but if you are completely new to Forex, the first thing you do is take a day chart. And the reason for that is you need to understand, okay, what am I looking at? What has it been doing? And how has it been moving that way? Try to get a feeling, try to get an understanding of how it's been moving historically in the last relative period, which is like 3 months, basically a quarter of a year, right? That Q1, 2, 3, 4 in the year, this kind of, it never really changes within those three because most banks work from quarter to quarter, so do the major financial institutions. So, the market kind of reflects that. Retail traders, although we are the majority, when it comes to volume, as in physical assets within the market, we are the minority by far. So we're not the ones moving the market. We're going along for the ride. It's important to understand that. So here we can clearly see, okay, it has been going up. It has been going up since December. It has actually accelerated about halfway through here in April. We see that it started accelerating because when we take a trend line, right, you always try to find a trend line, and you do that by finding the lowest point and you try to find the cleanest 3 connection points you can. So this on the day is what the trend looked like, and it from this point onwards, you can basically say, okay, it started accelerating. Right, 1, 2, 3 points. Now, that's all fine, but you don't really trade on that, because the first thing we do is now go to 4 hours, and in 4 hours you can see that this line holds true, but we want to maybe make it a little bit more relevant to where we are right now. So if we take this line, it's actually pretty much okay here. Need to make it a little bit smaller. Like I said, you need to get used to this a little bit. So this is roughly the trend line that it's been showing us. All right, we have a solid connection here and a solid connection there. So 1, 2. This is Elliott wave for those that want to know about that. Repetition of patterns. Anyway, it doesn't matter. We don't have time to get into that. But this is the bottom end trend line. So this is the supporting trend. The supporting trend line. The resisting trend line is the top one. There, and the same works for support and resistance. Okay, I can't get above this. That's a little bit unfortunate. So what we want to do is, you want to take a look here, but we know that it's going to be roughly the same by the looks of it. Yeah. So this is roughly the channel that it's moving in. Now it just recently got to the top end there, and we try to, if we take a look here, it started turning down. Now what we can do next is try to figure out where the turning points are naturally. So what we do for that is we simply zoom out a little bit. Oops, can I check this line? Yes, I can. Okay, good. So I want to have a good overview. And I do all this on 4 hours. So it doesn't matter if you trade on an hour, on 15 minutes. You should always look at the big picture first. And with a resistance line or a support line, what you're trying to find is the cleanest horizontal line you can find where you have, like this, the most solid connections. 1 here, 1 there, 1 here. That's 3 already. That's enough. 2, 4. And then here we have 5 right there, and then 6. Okay, so that's 1 confirmed line. Now the next one. So here 1, 1, 2, 3. Arguably 3, 4. I mean. Now we're gonna try and find the next one. And the next one's a bit tricky, but we can see it's either this one or it's this one. And this is where the question is. Where is the cleanest line? This one cuts this in half, and this completely ignores all of it. This one had a solid top. If I move it a little bit down, it's roughly where this, just this candle in the announcement stopped. It's roughly equal distance on this, and you also have connections there. Now you have, this is a resistance because it's an uptrend, so you go down as a resistance. Up is support because it supports the trend. It doesn't really matter what you call it. You can call this Johnny, Peter, and Hank. It doesn't matter as long as you understand when it reaches this line, it's going to either stop and turn around or go through and go to the next one. That's all you need to know. What you call the damn thing doesn't matter. So now, for those that trade smaller, you go even smaller. You go to 1 hour, and you do the same thing again. You have the big picture, and now you will see that you can refine it by taking half of the 4 hours. You cut the time frame in 4, so from 4 hours to an hour, you cut the resistances or supports in half. Right? Same from 1 hour to 50 minutes. You do the same thing again, and you will see that those little turns where people think it randomly changes is not random, because if I take the half of 1 hour and 4 hour, that's where this one changed, which is a 15-minute time frame. So it's a 15-minute resistance that rejected that one. So, and that's why 5 minutes and 1 minute you don't need, neither do you need 30 minutes. You use 15, 1, and 4, and then a day/week. But for most of you, you won't be trading in those time frames anyway. So, at least I hope you don't, because it's a different rulings when you start going towards a day. So now that we have our technical analysis, right? Normally you check the fundamentals, but we don't have time for that now. So what you would do before you do any of this is check is there any announcements? Right, the dollar had some announcements today. They're passed. They're done. So now the next is, how do you find an entry point? Well, historically, you can just look, right? Basically, every time you get to the resistance trend line crossings, this is where you have a decision to make a trade. For instance, here, there's one going to be coming up, and that's exactly where it is right now, right? There, this is what you call the relative trend line, because it is currently relative to the current time frame, not the historical past. You're trading in a smaller time frame, your target's going to be much smaller, right? If I trade in 4 hours, I try to trade over a 4 or 5 day period, which gives me a prolonged period of time to look at, and my target is 200 to 300 pips, kind of like swing trading, not specifically. But when I start trading in an hour, I cut that in half significantly. 100 to 150 pips is what I'm looking at, because that's relative in the next 24 hours to achieve for most pairs. Most pairs don't even move that much in a day, so you're going to be looking at 50 to 60 pips, right? Set your targets accordingly. If you go even smaller, like 15 minutes, okay, your stop losses are going to be in line according to the chart. Your relative trends are going to be according to that 15 minutes. Your take profit stop loss ratio should also be that. Now, in general, your take profit stop loss ratio, what you should be looking for is a 1 to 2 ratio minimal with the prospect of 1 to 5 and up. That is a good trade. If you're looking at a stop loss that makes sense, and this is the most important thing, this is risk management. If my entry point right now, if I would have to make a choice, I would take a buy. The reason for it is it got rejected after even a massive drop on the trend line, which is confirmed by the 2 points before, not the active candle. Don't use the active candles. Don't ever do that. Right? Active candles not confirmed. Past, yes. Active, no. It's just underneath this resistance, so that's the only questionable point. So if you'd have to make a decision right now, it's probably going to do bounce, 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 and then knowing the fact of retracement, right, that it retraces most of the fundamentals that happen. If we look at another cross-reference, is this relative trend right here. You do this. So I have a good idea that it's going to do bounce off of this and then go here. So if I would open it now, for instance, I would open it here, and now I just want to make a stop loss take profit. So the way that I do that is, oh, wait, hold on. There we go. So stop loss take profit, update. Oh, wait, hold on, sorry. So the stop loss and take profit, we take the levels. So my stop loss right now would be underneath the resistance and underneath the trend line. So roughly over here. So what is that? 114.50, pretty much. 1.14050, something like that. And take profit, well, roughly over here if I take this angle, so 1444. Okay, so 1.1444. Update. Okay, and now I have my stop loss that I can move around a little bit, and I have my take profit that I need to move down a little bit. There we go. And now you can see this ratio is 1 to 1 because of my entry. What you would do, if you know that it's going to go down, I would go in right here. When it rejects on this resistance, don't wait. A lot of people wait. Okay, I am expecting it to go do A, B, C. Let me wait for B to show itself so I know that I'm right and then go in. The thing is that if you do that, I go in here and you decide to go in here. You get this trade where it's 1 to 1, and I get this trade where this stop loss is still the same spot because it makes sense in comparison to the chart. My risk is significantly less with the same lot size, for instance, but my take profit is much more value. I hope that makes sense. Okay, so, okay. That in core essence. Now, indicators, as you can see, we decided on here that it's probably going to go here and then a buy. That is what the RSI that I added here for you guys is telling me. It's showing me the same, but normally what you would do is just take that whole thing away. You do the analysis, and then you go, okay, let's take a look. And let's get confirmation on my thought process here. Where'd it go? Hello. That should be here. RSI. Uh, okay, RSI, put it to 9. Okay, there it is. And there's the other one again, I guess. All right, so here, now it tells me, okay, it's at the 42 mark. It will start going towards the 50 mark and up, and then probably to 75, which would be in line with this line, which is in line with this line. So that'd be something like this. So it's dead on. That's probably what it's going to do. So that is the risk management where you try to find the entry point. The stop loss should be a relative point, not a fixed amount of pips. This is the complete wrong way of thinking about it. You look at the pips, you calculate first. If I would open the trade here, where would my stop loss be? What is that distance? Once you know that distance, you simply can allocate up to 3% of your account to it. You just make the lot size determine what the value of that distance is. I don't have time to calculate it, but you can see basically this is now separated in what's this? 20 pips per what's this? 20 pips? 20, yeah, 20 pips each. So every line is 20 pips here. Right, so if you would have to go in, if I go in here and my stop loss is here, it's about 1/5, so it'll be 15 pips stop loss, rough, give or take. No, wait, that's less actually. So no, it's about half, so about 10. So, my stop loss is half. Now, let's say you have a $2,000 account. 3% of 2,000 is 60. Minus 10 means 6 mini lots is what I could allocate to this trade on a $2,000 account. 6 mini lot trade. I'm risking $60, and my take profit is over here, which is going to be, let me see, that's 10 plus 20 is 30. So at 6, it'll be $180. That's pretty decent. That's a good return on investment for a single trade. And you're not overextending your account. You're not making high risk. You're risking 3%. If you do that every trade and you wait for these moments that it's at the resistance and trend lines, that's when you go in. And especially at the start, this is the best way to just start with it because you need that stability. Okay, so that pretty much covers everything at this moment. I know it's a lot of information and it's not the easiest concept to grasp at the start. There's a lot more to it than just this. However, if you stick to just these basics, I will, from personal experience, tell you that it's actually already enough to start making consistent profits because this is exactly what I did. Once you have the consistency that you need to slowly build up profit, then later on you can start by adding different things and learning new things and improving. And that's pushing it from 60% to 70% win rate and from 70 to 80. Right? There's nobody with 100%, and you're not going to be a millionaire overnight. For those that are not going to stay for the Q&A session, please, thank you for coming. I hope that everything was clear and understandable. Any feedback is more than welcome, both negative and positive, obviously, in regards to the webinar and what you saw. Now, if anybody has any questions, fire away. I'll read them out to everybody to understand. For those that don't have any question, well, we're basically done, and I wish you all a very pleasant evening for those that are leaving us. So anybody that has a question, go ahead. All right. Well, thank you for the feedback. Positive feedback so far, so glad to hear that. Okay, so I don't see any concrete questions or questions at all at this moment. So I'm just going to call that the night. I would like to thank everybody for listening. I appreciate your time. On behalf of CMSTrader, I hope you enjoyed this webinar tonight. For those, like I said, that don't have an account, take a look at them. They're a good place to start. For now, I wish you all a pleasant evening, profitable trades, and I wish you the best of luck in your trading. Cheers. Bye.